Hello and welcome to another edition of Investing for Generations. Today I want to take a deeper look into the Q2 earnings of Facebook. We'll give you my opinion about these numbers, and at the end I come also to a conclusion if I think Facebook at the current price is a good buy or not. So let's go. Facebook is not just Facebook. Facebook is a family of apps like WhatsApp, Messenger, Instagram, and so on. And they reach almost the whole world with all of these apps. In the Q2 2020, they reached 3.14 billion active people on their apps. And that's really an incredible number. This is almost the whole world. Of course, Facebook tries to reach even more people, and therefore they bought the biggest Indian telecom operator, Jio, for $5.7 billion. This could be a very smart move because India is already a big market and will be even more important market in the future, since the whole Asian continent is just rising up and there's a lot of money to make. The worldwide revenue per user in Q2 at $7.05. That's the same amount than in the Q2 in 2019. So this is a very stable number. And the drop from the Q4 and Q1 is because, as you maybe know or noticed, the advertising prices just dropped in the depth of the pandemic and recession situation we are in right now. And therefore, if you have the same revenue per active user, but more people you reach and more active users, of course, the overall revenue rises up to in Q2 to $18.687 billion, which is a rise to the Q2 in 2019 of around 10%. But also here we can see these drop from the Q4 and Q1 2020. And that's just because of the advertising prices dropped. And we also can see that almost all the money Facebook make is from advertising. So this have, of course, a big impact. Then take a look at the earnings per share. In the Q2, Facebook announced earnings per share of $1.80, increase to the Q2 2019, where the EPS was just at 91 cents. But keep in mind that in the Q2 2019, there is an 2 billion legal expense occurred. Without this expense, the EPS in the Q2 2019 would be $1.88 higher and therefore $1.99. And this just means we have a decrease earnings per share from the Q2 2019 to the Q2 in 2020. First and foremost, the result of the decreasing advertising prices. And the second is that Facebook have to invest a lot in the internet security of their apps, and therefore their earnings per share just dropped a little bit. But still, they make, of course, a lot of money. When the world comes back to normal and this pandemic will end at some point, and hopefully soon, I think also the advertising prices will go up again. And of course, if you are a player like Facebook who reach almost the whole world, you are very interesting for advertising, and therefore I think the prices for advertising will be rise again, and then Facebook will make even more money. And with all these numbers, Facebook beats the estimates. There was estimated earnings per share of $1.44, and with a reported $1.80, this is surprised by 25%. Then take a look how the stock price reacts to that. And we can see yesterday the stock price of Facebook just make a big jump of over 8% to $253 right now, with a PE ratio of almost 35. Just for explanation, the PE ratio just tells you the price to earnings ratio, or in other words, it just tells you if you buy the whole company today, it would take almost 35 years with the current earnings until you get all your money back. So this seems not so cheap, but of course with all these tech companies and with the still high growth even of Facebook, the PE ratio sometimes it's not the best point to figure out if a company is expensive right now or not. And because of that, I use my fair value calculator, know what's the intrinsic value right now. And therefore we have to calculate a growth rate, and 17% is the growth rate which tells me Yahoo Finance in their estimates. You can find this number if you go to Yahoo Finance and then to analysis. And when you scroll down, you find the growth estimates, and therefore Yahoo Finance say for the next 5 years we will have a growth of around 17% per year. And this is a number I use here for the first 10 years of my calculation. And because no business grow forever so strong, we also have a terminal growth rate for the second 10 years, years 11 to 20. And therefore I calculate with a growth rate of 8%. And then we also have to put in the discount rate, and this is just my expected return of the investment, and I calculate normally with 12 to 15%. That's the first step. And then we have to put in the current earnings per share over the last trailing 12 months, and this is $7.29. And you can find this number also very easy, very simple on the Yahoo Finance site, EPS, for the trailing 12 months of $7.29. And the rest, just this Excel sheet calculate. What happened here in this calculation is that you take the current earnings per share and multiply that by the growth rate, and then discounted it by the discount rate by the expected return of 12%, and then you come to a fair value of $186.30, and the current price, as I showed you before, is at $253. So it looks like Facebook is overvalued right now by around 36%. But of course you have to keep in mind that we are in the depths of a pandemic, of a recession. And so maybe these current numbers, especially of the Q1 and now the Q2, are not the numbers we have to expect when this will come back to normal. I guess this fair value is very conservative. And as you maybe already know, normally I like to buy my shares way under the fair value. I like to buy 20, 30, at best 50% under the fair value, which means with this calculation we had to wait until Facebook will go under $100, a good margin of safety. I think this will never happen, and therefore I think it would be a good opportunity to buy Facebook when they go under $200 or around $180. This could be a good range to buy more of these Facebook shares. But right now, for me, it's overpriced, and therefore I don't want to add to my current position, because as you maybe already know, I already own Facebook, and I'm up already 42% from my buy price, which was an average $178. And as I said before, I will think about to add more of Facebook when they went under $200, even better in the range of $180. That's my opinion on Facebook, but here you also have an insight of my whole portfolio. If you are interested in analysis of all of these other companies, you can find an analysis of every of these businesses on my playlist on my channel. Just click on the link here on the screen and you will find that. That's it for today. If you liked the video, give me a big thumbs up, subscribe to the channel, ring the notification bell, and then we will see the next time with another edition of Investing for Generations. See you then. Take care. Bye bye.